Hello, this is Shauna Green with Front Range Insurance Solutions. First, I want to introduce myself. I am the owner of the agency slash brokerage. We offer auto, home, commercial, malpractice, and life insurance. I have put all of my information right here on the screen so that if you have any questions, you're more than welcome to reach out to me. And if I can answer them, I will. You can also take a screenshot with your QR code, save that info into your phone so that at a later date or whenever the need arises, you can reach out to me. To establish some credibility, I want to tell you a little bit about who I am. This is my mom, Lily Rayback. She is a woman who has raised me with the notion of be prepared, not scared. And when the Marshall fires arrived, one of the first things that I felt in my heart was that many people were not prepared. I was sad. And one of the reasons I decided to reach out to the community and offer this class is because I knew if I could give some of the information to others that I have, I might be able to help others not have as big a loss as they might otherwise have had. I come from a long line of insurance people. My grandfather, Jack Cox, was a district manager for Farmers Insurance. On my mother's side of the family, my uncle Mike Rayback was a farmer's agent. On my dad's side of the family, I had two uncles who were district managers, and I had an uncle who became an agent. My dad became an agent. I have a cousin, Bryce Babcock, who's a rock star agent right now. And I decided to break away from the farmer's mold and become independent in 2019. What that means for you tonight is that I'm able to write with many companies, not just one. And because of that, I have a greater understanding of some of the coverages that are offered out there, what holes are in some of the policies, and what companies I would prefer to work with if I had a claim. Really quickly, I want to show you a quick video that was given out to our community about a week ago, and then we're going to talk about it.
Some families say dealing with the insurance companies already has been a problem. Denver 7's Russell Haythorne tonight with a couple that might be forced to relocate if they can resolve a huge discrepancy in their homeowner's policy.
Joseph and Cindy Reed's Louisville neighborhood, whose driveway does resemble a snow-covered war zone. The lower part right in front of us was the living room. Nearly every house is gone, including the home the Reeds bought 3 years ago. It's brutal. They moved here from the Atlanta area, looking for a fresh start following their daughter Joanna and son-in-law out to Colorado, a move out of necessity. Some years I've spent more time sleeping in hospital than I have at home. Their daughter, Joanna, is severely immunocompromised, medical issues that have had her in and out of surgery more than 100 times in the past 2 decades.
I have several neurological conditions. I have an immune deficiency. I get infusion at the hospital every 48 hours. And so they take me to and from those appointments.
She's a normalcy whip. She's my hero. Her conditions partially stem from skull malformation, and doctors recently suggested a place like Colorado with a cool, arid climate would be better for Joanna than Atlanta.
One of the conditions I had is exacerbated by the heat and humidity. We moved to Louisville, and Louisville is just the sweetest little town.
Then came the fire.
I thought, well, maybe we'll be leaving for like a few days because of the smoke. Never, ever, ever did it dawn on me that we would lose our house.
As if the catastrophe wasn't bad enough, Joseph and Cindy are now realizing they were grossly underinsured by Liberty Mutual. The insurance, for some reason that nobody can understand, was written at about $240,000 for the house. A home they bought 3 years ago for $580,000. To have the home that we have and love, we're short $300,000 to $350,000. So for now, a friend has launched a GoFundMe, which has raised an astonishing amount thus far.
So we're just so blessed to have so many wonderful people in our lives.
But it's still well short of what they'll need to rebuild. Basically, we need the insurance company to understand that this should not have happened. In Louisville, Russell Haythorne, Denver 7.
So many heartbreaking stories. Listen, you, our Denver 7 viewers, have helped raise now more than $400,000. dollars for.
All right, let me just get this off of full screen really quick so that I can move it forward and we can move on. So one of the things that I wanted to ask is, what are your thoughts? I want you to think about that. They had an insurance policy, right? And it was not adequate for what their needs were. So who's at fault? Is it the insurance company? Some say yes. I have a little bit more info because I'm part of an agent's page. Come to find out that they had actually requested that the dwelling amount be improved, to be increased, and Liberty Mutual said no. I'm wondering if this was a townhome. That could have been part of the reason. I don't know. What I do know, though, is that the way that we view insurance, which is what you are, we identify you as insurance. We see our relationship as teamwork. We're a team together. When you call your agent or your broker, you need to be giving them adequate information. And it's the agent broker's job to try to give you great advice. And together you create a good policy. You need to be a part of that discussion. So what are the things that you can do to make sure that you don't have something like this happen? One of the other classes that I gave, someone suggested that if the amount is not adequate and you feel like you disagree, find another company. There are so many out there, you're not stuck with one. Okay, if you have the handout that I sent out, the first thing that you should put in there that you are able to do is to read your contract. It sounds simple, but a lot of people skip over the basics. I know of someone who had 3 contracts that he had signed with the wrong address on them. He didn't take the time to look. You need to make sure that your name is correct, that your address, the mortgage company. If you've done a refinance recently, make sure your agent or broker knows. Do look at the details on the home. We're going to talk a little bit more about that too. You want to review the main coverages. I'm going to explain the really important ones in just a bit. Look for the exclusions. Your policy excludes certain things. They will not be covered. You need to know what those are. Make sure the facts are correct. Does your home have architectural shingles? Architectural shingles are going to cost a lot more than composite or asphalt. If you don't know what your roof is made of, you can actually go over to the building department of your town or city, pull the permits that have been taken out on your home, and find out what was more than likely. Sometimes some of the builders don't pull permits, but if they do, you can find out the company's name, give them a call, find out when your roof was replaced and what it's made of. You want to know, are your kitchen and bathrooms properly valued? In insurance, we value things by builder's grade. And then you have the step up with granite countertops, which is semi-custom. Then we go to custom, and then we go to designer. The differences in kitchen and bathroom levels can be the difference of tens of thousands of dollars. You want to make sure that you can get the materials that you put your hard money into putting into your home. All right, other features that you want to be aware of. Do you have solar panels or other high-end items such as a wet bar, or maybe you have a special trim package? Perhaps you have solid doors. Those things matter. Every single year, you need to have a review with your agent or your broker. If your agent or broker is not reaching out to you for an annual review, I suggest either calling that person every single year or finding an agent who is going to take care of you. Know when your renewal date is. Sometimes people don't know. They let their policy expire, and then a loss happens. Make sure that's in your calendar. Keep in touch with your agent and broker. Tell them about job changes. Tell them about life events. If you have a baby, those things are a big deal. You need to let them know what kind of businesses you're running. If you don't have an agent or a broker, you need to find one. It is super important. I can't tell you how many times I've written commercial quotes especially, and I've had someone call in, tell me what they were told by the company themselves, and I correct it and tell them that's not correct, they go back, the person they spoke with checks with the underwriter, and they find out that they were wrong and I was right. You want to have a good advisor. It is not enough to simply have insurance. You need someone who can tell you what those things mean. Okay, so the last thing that I have on this page is to sign up for the insurance company's online account. It sounds super easy and like a no-brainer, but a lot of people don't do it. Get to it if you haven't. Sign up for your online account because you can receive notifications if your policy is going to cancel, if they need added documentation, etc. The last thing that I am going to have you put in your list of what can I do, I recommend having your policy put on auto pay so that it will not cancel for non-payment. Types of coverage. I know you're getting a lot of info. Your brain's probably on overload. Hang in there with me. I have a purpose for telling you what these things are. We're going to be discussing them later, so you need to know what they mean. Actual cash value, in layman's terms, that means you're getting Craigslist prices. You don't want that. Replacement cost means that you are going to get the amount that it costs to replace your contents or your building or your home, whatever it is. Guaranteed extended additional replacement cost means it's basically the superpower for your dwelling coverage. I'm going to talk to you a little bit more about that in just a second. What is typically not covered? Again, read your exclusions in your policy. This is a typical list. Take just a second to review it. Look at what's there. If you have any of these items, you need to call your agent or your broker to make sure you're okay. All right, dwelling coverage. This is the amount that it's going to cost to rebuild your home. In your annual review, your agent has the ability to pull an estimated replacement cost evaluation. He needs details from you or she, and that way you can redo your record. You show your insurance company that you did your due diligence, and things can be easier in a claim. Now remember that in your estimated replacement cost, we do not include the price of land, so it will be very different from a real estate cost. It's just the amount to rebuild your building. Other structures, that's your coverage B. You're going to want to have, you want to let your agent or broker know if you have a gazebo, if you have a pergola, a barn, or a shed, or any other outdoor structure. Personal property. This one's pretty easy, right? It's everything inside of your home. And a good way for you to know exactly what it is, if you took your house and you shook it upside down, anything that was going to fall out, that's your personal property. Personal property, you want to make sure that your agent or your broker knows some of the higher end items, such as firearms, if you have guns. You want to let them know about art, gold, silver, antiques, collectibles, sporting equipment. Here in the Boulder area, we have a lot of really expensive sporting equipment, especially bikes, e-bikes. Those are the type of things you want to tell your agent that you have so that they can make a teeny tiny little policy for you, an endorsement on your policy that will cover those things specifically. You want to have an endorsement. Take this, write it down on your handout, circle it, called replacement cost personal property. That makes it so that you will not get Craigslist pricing. You will get those items replaced instead of having your insurance company give you a depreciated value. You want to make sure that you're reporting business equipment. And if you have a business in your home, some businesses can be covered under your home policy, some cannot. This year, due to COVID, it's becoming trickier. Insuring things like beauty shops and photography studios and different things like that within your home is more difficult. One thing I want you to be aware of is that cash is not really covered under your policy. Typical policy amounts are about $200. We had a client who had $400,000 in his home. His home burnt down. He did not get that replaced. If you have cash in your home, make sure you have a fireproof safe at the very least. And if you have other options, I suggest finding one. Okay, so if you have a total loss, don't be surprised if your insurance company asks for an inventory. You need to get some type of a home inventory app. In the handout that I provide, I actually give you resources to find an app, and then I also give you a checklist so that you can make sure that you're choosing a good app. You want to make sure, that you have a description of your items, a picture or a video. This helps the insurance company to know what condition your property was in. And you want to have the cost at the time of purchase, current appraised value for high-end items, the date and location of their purchase, and the serial, model number, and year of the item. Coverage D is liability. It's additional living expenses. When we had the California fires a few years back, it was taking longer than 12 months for many of the homes to be rebuilt because so many had burned down all at once. You have the option with several policies of extending your additional living cost to 24 months worth of support. Additional living expenses covers anything that's in addition to your regular expenses. You're still going to pay your mortgage. You're still going to pay your insurance. You're still going to pay basic groceries. This will pay for things like restaurants if you don't have the ability to cook. It will pay for staying in a hotel. I had a really smart client call me yesterday and asked if his additional living expenses would cover the purchase of an RV if he wanted to live in that because for some reason he had a loss. The answer is no. With insurance, you can never have a financial gain. The purpose is just to put you back to the financial standing that you were before. If he had bought an RV, he would have had an additional asset. Now, if he wanted to rent an RV, that would be acceptable. That would work out for additional living expenses. The next coverage, additional living expenses also helps you with things like if you need to have an extermination tent put over your home and you can't live there for a while, whatever reason. Okay, liability. This is a big one that you need to have for the majority of your claims that are going to happen. With your liability, it's going to cover things like dog bites, litigation, if somebody is hurt in your home somehow, slips and falls. And then one of the situations that I saw that was a big one, there was a group of friends who had gathered for prom. They were all out on the balcony of one of the kiddos' home, and the entire balcony fell with all of the kids inside. Now, that typical amounts are $100,000, $300,000 that I see often, and that doesn't cover a whole lot. I highly encourage my clients to increase their liability limits to $500,000. The typical price change is about $30 a year that I'm seeing. Increase your liability if you don't have enough. Your medical coverage, that's your coverage F on any of your insurance forms. Medical coverage is going to cover some of the lower cost medical expenses such as an ambulance drive, cheaper hospital bills like a cast or an x-ray. It will also cover some of the deductibles that the health insurance will not cover. Medical is a no-fault coverage, which helps insurance companies to keep the litigation down because it's immediate. You don't have to wait for all the claims process to go through. That money will be given to the person who's injured to recompensate them for their expense. Deductibles. This is I typically see deductibles as a split limit like this. This one means that you have $100,000 for all perils, minus the items that are excluded. $2,500 for wind and hail. Your deductible is the amount that you are contracted into paying before the insurance company will pay anything for your claim. One thing you want to watch out for are percentages. Here in Colorado, we're starting to see a lot of percentages for the wind and hail. So if you have a $500,000 home and you have 1% deductible for wind and hail, it means that you're going to have to pay $5,000 if you need to get your roof replaced or some other wind destruction happens. Endorsements are the superpowers in our policies. They're the ways that we beef them up. Sewer and water backup. No explanation needed there. Extended dwelling coverage. This is huge. You need to circle, you need to put a star around this one. You need this one on your policy. This is a very inexpensive way for you to boost the amount of your dwelling replacement coverage. That's coverage A that we talked about in the beginning. Example, most of these, the companies offer 50%, they offer 25, 50%, or 100%, as Safeco will offer, replacement cost extensions. If you have a $500,000 home and you have a 50% replacement cost endorsement on there, it means you have 50% of that $500,000, which would be $250,000. Put them together, you have $750,000 to replace your home. Building ordinance or law is one that I am worried a lot of people don't have. It is what helps with debris removal. It also pays for the updates that coding requires. Some of the homes in Louisville that were recently lost, a lot of those are older and they're going to have to be repaired up to code. This coverage pays for that. Matching undamaged siding, roof, or windows. If you get your roof fixed, not replaced, you're going to have different colors. This helps so that you have continuity. ID recovery can be offered on your home policy. Super inexpensive, but you get usually about $25,000 for your ID recovery. Personal property replacement cost. We've spoken about this one before. This is what makes sure that you're not going to have the Craigslist prices for all of your contents. Make sure you get that one. Refrigerated products, not a huge one. You get about $500 so that you can refill the fridge if you have a power outage or something like that. Equipment breakdown. This is one that is actually misunderstood within the insurance world and among clients. This does not mean that due to wear and tear, you're going to get your AC or your furnace replaced. That's not what insurance does. Now, it does mean that if it has some mechanical malfunction that ruins the machinery, or you have an electrical surge, then you can submit a claim and have your appliances and your furnace, your water heater, whatever it is, it can be repaired or replaced. We also have service lines. Buried utility or service lines is one that I recommend for some of the older homes. Or if you have big trees around your property, it will help so that if you need to get your plumbing scoped, or in the case of my uncle, he had an aspen tree that had roots that grew into the plumbing. They had to have all of that dug up, all of it repaired. It cost about, I think he said $10,000 was what it cost to fix that. It will take care of those type of situations. Okay, so these next two are blue. The first one is scheduled roof replacement. This is not a good one. Basically, it means that you are getting closer and closer and closer each year to actual cash value, the Craigslist roof. You do not want that. The next one is actual cash value. It means you basically do not have coverage on your roof or whatever is ACV. Now, the last one is replacement cost roof coverage. That's golden. Go for replacement cost. If you have an older roof, some companies like Safeco, they have programs that actually will provide coverage. You want to look for that. Okay, additional coverages. The first one is an umbrella. An umbrella goes over your home and over your car, or cars and motorcycles and all the things that you own personally. And it will increase your liability limit from the 100, 300, or 500,000 up to $1 million or more, depending on what your needs are. It is incredibly inexpensive for what you get, and it's just a matter of a couple $100 or a little bit more, depending on what your situation is. If you have teenage drivers, it's going to be more. If you have teenage drivers, you should have an umbrella because they are huge liabilities. Now, the other additional coverages that I recommend looking into are life insurance policies. We have special policies with living benefits, which means that it has cash value that you can draw from during your lifetime. You do not have to wait until you're dead to give it to someone else. In this situation with the Marshall fires, people who have living benefits, I believe, would be able to feel a lot more peace because they know even if there are holes in their home or auto policies, they have an extra source that they can draw from. And it also helps with different medical expenses. I suggest looking into them. They're great. Last but not least, if this has been helpful for you, I request that you scan the QR code below, that you put my info into your phone, save it. If you need to call me, do. If you need to reach out, do. I'm here for you. I'm happy to answer any questions. And I do request that you leave a Google review for me. I'm Shauna Green with Front Range Insurance Solutions. Let me know if any of this was helpful. What did you learn? You can also reach out to me and tell me what I missed and what you wish I would have talked about. I'd appreciate the feedback. I hope that this was helpful. Signing off from Front Range Insurance Solutions.